Well, let's talk some more about this now with Matt Maley, who's Chief Market Strategist at Maley Tabak. Thanks so much indeed for joining us, Matt. So we've seen this big rate hike in the States, but is this really going to make a difference to these record inflation figures we're seeing in the States?
Well, it's not going to make a big difference, to be perfectly honest with you. I mean, the stock market is getting oversold on a short-term basis, and sentiment is very negative. So we could see a bounce at any time, really. We've seen a couple of bear market bounces already this year. But the biggest problem we have now is that this is a supply-driven inflationary environment. This is just like what we had in the 1970s with the OPEC oil embargo. Now it's because of the supply chain issues and, of course, the war in Ukraine. And what the Fed can do demand destruction and knock down some of the demand side of things. But when the issue is supply, inflation is going to stay there. I mean, the point is people still have to put food on their table. People still have to heat their homes. And those are the things that keep prices high, no matter what the Fed does.
Even so, though, there have been criticism that the Fed didn't actually act sooner to raise rates. Is that partly why they've gone so big this time?
Yeah, there's no question that the whole thing started. I mean, this time last year, I was criticizing them for saying, why are they keeping the liquidity spigot so wide open? They had emergency level liquidity, and yet the emergency had passed. So they were way too slow in making that change. Now they're kind of between a rock and a hard place, because if they go too hard, too fast, then you start to worry about what, if we get freezing up in the credit markets. That's what happened in 2018. People forget it was actually the freezing up of the credit markets that caused them to pivot. So if you go too fast, it causes bigger problems than if they, So they're between a rock and a hard place. And actually, I think they did what was the right thing. And the problem is it's going to be painful one way or the other. They're doing what they can, but they made the big mistake in the past. They can't make another one now.
So as you say, stuck between a rock and a hard place. Where will they go next? What's left in their arsenal to try and tackle this inflation and get things back on track?
Well, I mean, the biggest thing I think is going to have to come from elsewhere. I mean, one of the things that people talk about what happened with Chairman Volcker 40 years ago when he really came in and raised interest rates in a big way and it tamed inflation. But we also have to realize that a big thing happened at the same time. We had the Iran-Iraq war took place, started in 1980, and they had started pump. They said, forget the OPEC and oil embargo. We're going to pump like mad because we have to pay for our war. And oil went got cut in half over that decade. That was a big help to getting inflation down. And I think that we're going to have to do something in the situation in the geopolitical sphere to really help this, because if not, we have a continued war of attrition. Oil prices and natural gas prices are going to remain high, as are food prices, and that's going to keep stagflation with us for a while.
So all these rate hikes, this rate hike talk has been stoking fears of a recession. How likely do you think that is for the United States and worldwide?
I think it's high. I mean, I've actually been saying that for several months now. I hate to say it, but most of Wall Street usually comes and tells you they don't tell you that we're in a recession, that we're going to have a recession until we're already in it, and sometimes until it's already over. It's kind of an unspoken rule. I don't really know why they follow that. But when you have GDP, we already had a negative GDP quarter in the first quarter. They're now saying flat for the second quarter. We're going to have a recession. The question now is whether it's going to be a deep one or just a mild one. And I think the markets still have to price in even the recession. So I think even though we could have a bounce at any time, I think the line of least resistance is going to be lower for a little while now.
So a pretty grim outlook then. Do you have any thoughts on when these grim conditions might stabilize?
Well, I mean, the thing about this is that investors, this is normal and healthy. I hate to say it, as painful as it is, it's normal and healthy. So I think as we get, when you start picking at some of the names that are already washed out, like Amazon and Meta and Google, some of these names, and just buy a little bit each month. But by the end of the year, you'll have a nice little position at some real good prices, and you'll be able to take advantage of the next bull market. So I guess my point is embrace what's going on right now and take your time. Because we'll come out of this. Don't worry. I'm going to sound overly bearish because it's actually going to create some great opportunities.
Okay, Matt Maley, Chief Market Strategist at Maley Tabak. Thanks very much indeed for talking to us today.
Thank you.